Welcome back to Pack Chat. Today, we're so lucky we're joined from Josh Cottam, founder of Think Private. Josh founded this business just under 6 months ago and has now settled just under $70 million in his first 6 months. Essentially, he's built a platform that connects both brokers, lenders, or private funders, I should say, and borrowers. Look, Josh works purely in the private funding space. Look, it's a growing space and it's changing the way people think about financing. Josh, I've got to start by asking, for those who aren't familiar, what is private funding? Tell me about it, and what sort of clients does it actually attract?
Yeah, mate. Blake, thanks for having me on the podcast. Private funding, it's a little bit of a buzzword. People like to call it private credit, private funding, non-bank lending, but essentially it just refers to lending that isn't facilitated by banks. And so the private part of it essentially just means that the money's coming from private markets. So this may be from high net worth individuals, and these private credit funds will pool those funds together. Might come from family offices, it might come from institutional groups overseas or onshore. So yeah, effectively just refers to the provision of credit that isn't from the banks. And it's sort of been a little bit of a growing industry over the last few years. Back in 2020, in terms of market share, private credit made up about 9% of all commercial real estate debt. Now we're in 2025 and it's probably closer to about 20% and growing. Those numbers are expected to continue to grow. So we're sort of, there's an expectation that it'll reach somewhere closer to 30 or 40% market share in the next 5 years. And that's sort of in line with where the US and Europe are in terms of their percentage breakdowns between bank and non-bank or private credit market share.
And who exactly, what's a typical client for private finance?
Yeah, so anyone can be a client for private finance. The space that we operate in is primarily for property developers and business owners. So we only facilitate commercial lending as opposed to sort of consumer residential lending for home loans and personal loans. But it's typically... It's just an alternate solution to your traditional lenders, which are your bank lenders. And there's a number of reasons why someone may use a private lender. So, there might be a property developer. Banks, over the last few years have been really dialing back their property finance books and are becoming a lot less competitive. And so what you'll find is a lot of these development projects that are going on around the eastern suburbs and the like are typically facilitated by or funded by non-bank private credit, private lenders. And so, yeah, there's a number of reasons why, but it really, you just got to get into the detail and understand it on an individual level. But yeah, it's definitely been growing.
Yeah, exactly. And it's quick finance as well. So can you give me a scenario where what's a perfect private finance deal?
Yeah, so it can be a lot quicker. That's one of the benefits of working with a private lender. So, we've done deals inside of a week and a half, if not sooner. And that's sort of something that's typically not possible with a bank lender. So if you do have a transaction that you need to move a little bit quicker on, engaging a private lender might be the better option. There's a number of reasons why. Typically, banks are a lot more rigid with their serviceability requirements, whereas private lenders can be a little bit more flexible and provide solutions where interest might be capitalized as opposed to serviced monthly, which for property developers or business owners might be attractive to them depending on their circumstances. So, the perfect private lending deal, it's, there's a wide variety of transactions that we facilitate, anything from development finance loans, land bank facilities for property developers, bridging loans. So you may have purchased a property and need a quick solution to settle on that. Equity release facilities, so whether it's a first or a second mortgage, and you're a business owner looking to get access to capital, and you've got equity in your property, but you may or may not have that ability to service the debt with a bank or a mainstream lender.
So just to cover it, so you're securing loans against property. What's the max sort of LVR you're going up to against these properties?
It's typically a little bit less than what you would get from a bank lender. So typically banks, you can lend all the way up to 95% LVR for a home loan. And then most of your standard options sort of sit around the 80% mark. In private lending, there are options up to 80%, but between 75 and 80% LVR, it's a little bit less common. And I think the reason for that is just the way that they assess a transaction is different to the banks. The banks are looking at things from a serviceability perspective, so they'll go, "What do you earn? On a
what's your
monthly
income?
basis?
What's your liabilities? What's your repayments?" Let's fully understand you as a client. Whereas the private space is more, what's your exit strategy?
Correct, exactly. What's your LVR? What's your exit strategy? So, yeah, because of that, they typically provide lower LVRs, typically capping out at about 75%, but really depends on the situation and the type of asset that we're dealing with and securing the loan against.
So can you give me some examples of some exit strategies that clients use?
Yeah, so I mean, look, if you're a property developer and you're developing a block of units in the eastern suburbs here, your exit strategy would be to sell those units or refinance them back to maybe a mainstream lender for a long-term hold strategy. If you've got a development site that you're looking for finance for, you might be looking to roll into a construction facility, sell the site. You might have another asset that you're selling, which may allow you to debt reduce so that you can sort of reposition back to a bank. If you're doing a bridging loan, it could be sale of the asset. You might be working on improving your financials to be able to take yourself back to take the borrowing back to a mainstream lender. Like, I think one thing that's important to consider if you are considering using private lending is that it's typically a short-term solution. And so, yes, the interest rates are typically higher than what you would expect from a bank. I think banks are sitting anywhere from sort of 5 to 6% roughly at the moment. You'd be the expert on that.
I wish I were that sharp.
But in the private space, it's interest rates are probably starting in the 7s, with most options in the 8s, 9s, or 10s. So, yeah, it is a little bit more expensive. And because of that, you don't want to be sitting there servicing that debt for a long period of time. Typically, the loan terms cap out at 12 to 24 months. And so, the idea is you get in, use the funds for whatever purpose you're looking to use them for, whatever commercial purpose, whether you're doing a development, etc. And then with the idea of having an exit strategy so that you can either clear the debt in full or reduce it down to a level where you can potentially refinance back to a mainstream lender on a long-term solution that can be serviced.
Amazing. Makes sense. And look, in terms of like flexibility of these sort of products, like how flexible are these with these private lenders? Are these lenders making you do pre-sales? Like what is it?
Yeah, so for property finance deals, it's typically a lot more flexible than what you would see from a bank lender. So banks typically want pre-sales. Their LVR covenants are a little bit lower than what you would expect from a private lender. So yeah, there's a lot more flexibility there. There is a premium that you pay on the interest rate, but I mean, for most developers these days, it's becoming the number one option is they don't even consider using bank lenders. It's almost become mainstream at this point.
Let's go into like, what does a traditional product look like versus what does a private look like? I think loan term is a massive one, but I mean, how do you see the difference?
Yeah, look, there's a number of different things that sort of differentiate between a private lending facility and a bank lending facility. So it really depends on the use case. If it's a development finance loan, bank lenders will typically have higher pre-sale covenants. They'll provide a lower LVR. They're a little bit more conservative on some of the different ratios, like lower loan to cost ratios, and a little bit more stringent on how they assess builder risk, developer risk, asset risk, etc. In the private space, it's a little bit more forgiving in a way, and there's less requirements for pre-sales. Oftentimes, there's multiple solutions where no pre-sales are required. The LVRs can be stretched, sometimes up to 70, 75, and even 80% LVR. And so, yeah, it's definitely a little bit more flexible. That's for a development finance loan. If you're looking at a bridging loan, the private lender will be able to act a lot quicker, lower serviceability requirements, or in some instances, if interest is prepaid, it's not interest serviceability isn't a consideration because oftentimes, as we discussed before, there's an exit strategy on the back of it. So it really just comes down to everyone's individual scenario.
So to sum it up, it's really common sense lending. It's, okay, well, this is how we're going to pay back the loan, but these are the funds we need to get it to that level, to renovate that property, to build that second level, to fund that business venture. I think, look, it's going to continue to grow in the space because it's like, well, the banks are just not touching common sense. Like, they've obviously got their rules and requirements, and A lot of the time clients aren't fitting there. I mean, tell me, like, what's a really strange scenario that you've seen? Like, you're across quite a lot of deals now. Like, what's something weird that someone's needed money for?
It's a good question, actually. I think it's a good question.
I've thrown something at you here.
Yeah,
Like, is there something like obviously we've got our typical ones, which is development, but is there something like, you know, someone needed to fund a certain thing or a certain business venture? Like, what are you saying?
I did have an interesting scenario probably about 2 weeks ago where a lady was she had a development site that was approved for the development of a crematorium. And that was quite an interesting one.
Wow.
Typically a bank wouldn't look at, or that in this instance, they weren't able to look at that scenario. And yeah, that was a really interesting one. I mean, it's not every day that you come across a site that's approved for a crematorium.
Yeah.
It's a little bit fitting given that we're across the road from the cemetery here in Coogee.
That's it, Coogee. Yeah, it's Coogee Cemetery. There you go. And look, let's get into your business. Like, explain to me Think Private, exactly what your platform does and why you saw the need to build it.
So Think Private's a new platform. The business has only been around for 6 months now. And the premise of the business is we connect other mortgage brokers and property developers to private lenders. That's the core of the business. And so what we've done is we've created this auto matching technology where as a broker, you can create an account with Think Private, log into the platform and submit your private lending scenarios through. And from there, what we do is we have a technology that matches that particular scenario with the most competitive offering that we have of the lenders on our panel. And so at the moment, there's over 100 different lenders that are on our list of approved lenders, if you will. And so what we do is we collect data about their products and we use that to match the particular scenario with that lender.
Amazing. There's nothing like that in this space. Essentially, look, if I want to place a deal with a private funder, I've got to have a relationship with X, Y, Z, potentially 10, 20 different lenders that are constantly updating their products. So to have a one platform that goes, oh, actually, this is a way that I can connect my client with the best solution. And sometimes those best solutions are those sort of outer area sort of lenders that I would never come across. I mean, where is this Australia wide? Is this Sydney lenders? Like what's going on here?
Yeah, so you made a really good point. Like historically, private lenders, they've been very paper-based, and to get access to them, you had to have a relationship with someone on the inside, one of the relationship managers, one of the directors. And so, you know, what we were finding is that to get access to the most competitive lenders or offerings in the marketplace, it's almost too difficult for the everyday broker and everyday developer. And because there's now so many lenders out there and it's becoming a much more mainstream option, we sort of thought that by taking all of these products, putting them into the one platform, it would give both brokers and developers access to those products in real time. And I think that's really powerful. In terms of the lenders that we deal with, I mean, it could be anyone from a high net worth individual that's lending money on a peer-to-peer basis, a family office lender, could be an institutional group, whether they're onshore or offshore. So it's a very wide variety, investment banks, different pension funds. So yeah, it's a very wide variety of lenders. And at the end of the day, our job is really just to find the most competitive solution in the marketplace, whether that's a Japanese investment bank or a local small boutique private credit fund in regional New South Wales. Doesn't matter. It really just comes down to where the best products are.
Amazing. And look, from a broker's side of things, like I think communication is like a key part of a process with a client. How does your platform communicate with the broker, and how does the broker then communicate the solution to the client, or is it all automated? What's the process like?
Yeah, well, we are working to build in a lot more automations. There's a good portion of it that is already automated. But as I mentioned before, a broker will create an account, submit their scenarios through, and then get presented with a funding option. And we present that to them in our, indicative finance quote, which essentially outlines what the fees and charges will look like, breaks down a summary of the next steps, and makes it really easy for a mortgage broker that, may or may not understand how the private lending space works. And if they already do understand how it works, I think oftentimes what they find is that the rates, fees, and sort of offering that we can put forward is a lot more competitive than what they were able to find. A really good example of this is just recently, actually last Thursday, we settled a deal. The deal was referred to us by a top commercial mortgage broker, someone that's, won multiple awards and very well respected in the industry. And he came to me essentially saying, look, I've got this super tricky scenario. I can't find a solution for it. Can you help me out? And in about probably 2.5 weeks, we were able to find and settle a solution with a private lender that, he wasn't able to find a solution for that transaction. We got the facility settled, helped the client settle on a property that was potentially going to lose because the contract was going to be rescinded. It was due for settlement. And so, like just things like that where you're able to help out, whether it's an inexperienced broker that's never done a private lending transaction before, or someone that's been in the industry for 10 plus years. There's solutions there for everyone, I guess.
And just on that, okay, let's go over the fees. Okay, so fees look expensive in the private space. So we've got establishment fee, legal fees. Am I missing a fee in there? Valuation fee. And then obviously you pay the high interest rate. How do you communicate to clients, and how do brokers communicate to clients to go, yes, well, these are the fees, but potentially if you don't pay these fees, what are you losing out on? Is that sort of the way that brokers sort of communicate that, like the opportunity loss or of losing a deal, or what is it?
Yeah, 100%. I think opportunity cost is a huge factor that's taken into consideration. Like if you've purchased the property, you've got a 10% deposit on the line and you need a solution to settle, oftentimes taking on a slightly more expensive solution to settle on that property, there might be uplift in the value of the property. You might be a developer that sees potential in redeveloping that property. So that there is an opportunity cost there. And I think, whether it's getting access to capital for your business, the banks won't give you the money, but you do see a huge opportunity to take those funds on and invest them to make an ROI or a return on that investment. I think there's a really huge opportunity there. And
amazing. And tell me, your business, Think Private, where are you attracting, how are you promoting the platform? Are you into marketing? What do you do?
We do a bit of marketing. Yeah, we're on LinkedIn. At the moment, probably 90% of our business comes through other mortgage brokers. And so we're sort of tailoring the offering and the platform to be suited for the mortgage broker community. However, we do have a few direct developers that have reached out to us and are wanting to get access to the platform and the technology that we've built. And so it's a bit of a mix, but we I think at the moment we're only a new company. We're a team of 4, and I think for the short term, we're going to keep it sort of quite niche and narrow with the brokers that we service. But I think as we expand and grow, we can really start to build some scale and bring a lot more brokers onto the platform, get a lot more brokers putting their scenarios through and getting matched in real time. And that's the vision for the business.
Yeah, love it. And look, in terms of you've got a team of 4, as a startup of a growing business, I guess you wear a lot of hats. What is your exact role in the business, and how do you sort of manage your team to do different jobs?
Yeah, it's a good question. At the moment, I do everything. So marketing, sales, working on the technology and all of the designs for the tech, we do them in-house, and I do all the designs for that. Any of the sales and just everything. So yeah, there is a lot that goes into run, managing a business. And I think the added layer of trying to build tech alongside that definitely adds some additional just work and potential complications, just because there's just so much more that you're trying to solve, and you're trying to become so much more efficient by building this technology, which once it's built is great, but just getting there, it's just an additional hurdle. But I think that's probably the most rewarding part, is building something that no one's done before, or potentially a few people have tried but haven't fully succeeded. And that's probably the most rewarding part for me, is building something and creating something from scratch.
Wow. And tech seems to change every minute. There's something new coming out. How are you staying on top of it? Do you have someone full time that's working on the tech full time, or how does that work?
Yeah, we do. We have a partner in the business. It's a software developer, and he's working on building the tech full time. So I think that's really powerful and something that's helped us get ahead with our tech development. you mentioned that tech is changing every day. I read an article this morning that there was an AI agent, real estate agent in Portugal that sold $100 million worth of property. Wow. It just makes you sit there and think, like, if you've got an AI real estate agent selling $100 million in property, how is AI going to affect, the mortgage broking industry, the real estate industry, and all other financial services and professional services industries? And so I think, that's AI is probably something that needs to be watched. I'm not sitting here saying that, it's going to take over the whole world, but it's definitely something. Maybe one day. Yeah. But it's definitely something that I think at the very least you should be understanding the value that it can add to your business, whether it's simply using something like a ChatGPT or a similar equivalent, or looking at how you can build in different use AI to help improve your efficiency on a day-to-day basis.
Look, I see it massive, especially for your platform, because if the AI's got access to all the data from every private funder in Australia, and then is continuing to learn from other scenarios, is that an implementation that you're trying to put into Think Private?
It is, yeah. It's something that we're working on. We see huge value in collecting all of the data from all these different private lenders, all the different lending scenarios that we capture, and sort of translating that into an AI model that can essentially suggest in real time what the best lending scenario is, not just based on the preset products that we've built into the database, but then also based on what's actually eventuated. Because it's one thing to capture the lender's product data and their appetite and sort of translate that into the platform. But if we can in real time match the lending scenarios with using this AI model that has all of the data fed through it from previous scenarios that we've captured, previous deals that we've settled, previous deals that we've quoted on, I think that's going to be really powerful.
Right, amazing. And also, what about from the lender's side, like auto approvals? Like, do you see that changing?
I do see it building in different efficiencies, yeah. Historically, especially private credit, it's been quite a manual industry. And I do see, these sort of automated approvals. You're already seeing it in the bank lending space, whether that's AI or just, great technology. You're already seeing sort of glimpses of that. And I think it won't be long until there's, lenders that are sort of pushing out these automated approvals and sort of building AI to improve their efficiency for sure.
Yeah, amazing. Yeah, no, it's definitely a space to watch. And if anything, it's probably going to be a benefit to the private, well, your space anyway, in the private funding. Look, I think it's something to watch across the whole industry. But what I think my predictions will be is that yes, AI is going to take a lot of jobs. It will take a lot of the mortgage broking role out. But I think that if there's 10,000 brokers in Australia, that number will just get smashed to like about 1,000. It'll be way more efficient for those top guys to do the best job. And look, we're here to be advisors, to help you through the whole process. So that's the part that, people still want that human connection, but there's not going to be a need for, 10, there's going to be a diminishment of less than, minus divide it by 10, what there is today for sure.
Yeah, no, I agree. I think at least in the short term, it'll definitely make every mortgage broker a lot more efficient. So at the moment, if you're a top mortgage broker and you're delivering a 10 out of 10 offering to your client, if you can do that at scale and maybe service 5 times more clients because you've built in all these different efficiencies with AI, I think that's going to be really powerful and probably contribute to that sort of reduction in the number of brokers in the market, just because, there's obviously brokers that are better than others, just because they're more experienced and they put a lot more time and energy into their offering. And so if they can be more efficient and pick up a larger market share, someone like you, then I think that's definitely going to change things.
Yeah, exactly. And it's about giving advice. Advice not just on the lending side, it's advice across the whole industry. Purchasing property, offering different solutions, brainstorming things, understanding private credit, which is a big one, really a beast in itself. But tell me, Josh, you work with your brother. He's a co-founder of Think Private. What's it like with your brother and how's the family dynamics at home?
It's awesome. Yeah, I love it. It's we ran a business together. Oh, this was probably 6 or 7 years ago, we had a burger truck business when I was 16. He was 17 or 18. We set up a burger truck business, ran it out of the front driveway, and did that for 2 years. So we do have experience working together in a business environment.
Don't breeze over that. Explain exactly what you just said. So you're selling burgers out of your driveway.
Yeah, we essentially we were working at a burger restaurant when we were 14, 15, just as you do, casual job after school, and we decided to step out and do our own thing. We bought a food truck, and we were doing delivery only on a Friday, Saturday, Sunday night. We got it to the point where on a Friday night, which was probably the busiest night, we'd have maybe, I don't know, 3 or 4 people in the truck working and cooking burgers, and probably 7 or 8 of my mates from school delivering the burgers. So
wow.
Yeah.
That is crazy. And what sort of finished that up? Could you sell that, or what was the exit out of that business?
Yeah, look, we ended up just moving on from it. I mean, hospitality is a tough industry. Sort of hit the point where Matt was moving into the financial services industry, and I was just doing my HSC. So we put it to the side and decided to focus on finance, which I think has played in our favor. But it's definitely, I think, running a small business like that, you do truly appreciate what goes into something like that. And it's a lot of hard work, but very, very rewarding.
And what was the biggest takeaway or lesson that you learned from that business?
Oh, just that you've got to work hard. Probably the biggest thing. Nothing comes unless you're willing to take risks and work hard, which is what we did. I was 16 and I think we spent like 15 or 20 grand on a burger truck. I remember sitting down and we were pitching to my parents to lend us the money to set up a restaurant. And we're like, we need $200,000. We're going to set up a restaurant. And I was talking to Dad about it the other day, and he's like, remember when you were pitching to us to set up this burger restaurant? And bearing in mind that when we were pitching that, it was probably like a year or 2 before COVID hit. And so I think it's probably a good thing that they didn't give us the money, and good thing that we're, where we are today. But yeah, definitely lots of lessons that come out of that.
Wow. Pitching, give me the money. I need 200,000. It sounds like you went down a better path anyway. So you went down burger truck, 15, 20,000. You've got your mates working with you. Like, mate, that would have been unreal. Okay, just to start as well, you didn't even have a car to tow this thing around. How did you move this?
Yeah, it was a bit of a challenge. We were soliciting mates to help us, tow it around and whatever else. So yeah, it was interesting to say the least. But it was a lot of good lessons. Taught me a lot about the fundamentals of business, about that you working hard, delivering a good product or service, and really focusing on the customer, which is something that we did. We're probably getting off topic here, but we had, I think it was 100 reviews across Menulog and Facebook reviews, and they were all 5-star. And one thing that we really focused on, I know it's just a burger business, but we really just focused on delivering a 10 out of 10 product and service to our customers. And so I think if you focus on that, that's probably one of the core pillars to running a successful business.
100%. Service is everything, and doing right by people. That will sell yourself over time anyway. You just you do right by someone, and that's making that perfect burger, putting in that effort, and you'll get paid. The universe will pay you back in the end anyway. Look, our biggest referrers are our clients. So the more love we put into our clients, the bigger we're going to grow. And that would be I'm assuming would have been the exact same in your burger venture.
Yeah, 100%. Yeah, you look after your customers and they look after you. I remember we'd have the same guy every Friday night ordering the same thing at the exact same time, and he's always leaving 5-star reviews. So, if you look after your customers, they'll be a customer for life, hopefully. And I think that's super critical to running a successful business. And
look, that's a massive takeaway. How do you implement that same sort of perfect service in Think Private?
Yeah, look, it's something that I'm very focused on, and maybe sometimes to my own detriment, just because I really take every transaction with 100%. I really dial into it and really make sure that I'm providing a 10 out of 10 service. And I do find at times that probably, does start to affect other aspects of my life because I'm so invested in the outcome and it's like a 110% effort to get the best solution and outcome for our brokers or developers that we work with. And so I think it's super critical. But yeah, I think it just needs to be maybe a little bit of a note for me, just to make sure that I'm making sure I'm managing it properly and not letting it, creep into the personal life.
Man, I'm still stuck on the burger shop. Like, that is like wow. Like, that is like, I just can't believe that. I mean, that is entrepreneurial spirit. And I can see that you've sort of adapted what you did. Okay, so you're working at a restaurant before. You've gone bang, bang, bang. I can do this myself. I can do this potentially better. I can give a better product, a better service. I can outdo but take away everything I've learned from my current restaurant and then adapt it into my new business. How did that play out? Because you didn't just open up Think Private from today. What did you learn? So you obviously work for a private finance lender, M Squared Capital. We did a lot of deals together when you were there. Absolutely amazing. It actually got me into the private space working with you. What was it like working for M Squared Capital? What were the biggest takeaways, what you've learned from that business?
Oh, yeah. Well, look, M Squared, they're great. I was there for probably close to 4 years, and it really taught me a lot. I think the biggest thing that it taught me was just being a good person. And I think the people that are, in business for the right reasons and they're good people are usually the ones that end up on top. That's probably, one of the biggest takeaways. But then also just being really, really dialed in and focused on what's important. I think that's something that, I carried through, whether it was at the burger business that we ran, working at M Squared, and then now at Think Private. Just focus on what's important, which is delivering a top tier offering to your customers and just really focusing on just the overall service that you're providing and making sure that it's a 10 out of 10. I think if you do that and you're really focused on the outcome for the customer, then everything else seems to fall into place.
Amazing. So I get that, like, you're dialed into Think Private, you're putting a lot of effort into it. I mean, how much does your personal life actually play into it? Like, what are you doing personally so you are switched on during the day?
Yeah, like it's a lot of work that goes into it. We're working long hours, and being a startup, like I mentioned before, we're working on the tech, we're working on, we're hiring an employee at the moment or looking to. So there's a lot that goes into it. But I mean, my life essentially consists of work, go to the gym 5 times a week, training for a High Rocks event, the Sydney High Rocks event, which is coming up.
Yeah, the High Rocks bug.
Exactly. It'll be my first one. So I'm super excited for that. That's coming up first week of July, I believe. So I've, just training for that, working really hard, and then, just spending time with my friends and my partner and just enjoying life.
Do you have a work-life balance? Like, is that a thing for you? No, you're always on.
Look, I try, but it is hard. Like, starting my own business, you just, and I'm sure you know this, you're just super dialed in and you're always thinking about new ideas and how you can improve your offering. And I think it's a good thing. Like, I enjoy it. And if I didn't enjoy it, I wouldn't be doing this. And I've always I've always gone through life with that sort of that thought process or sort of, if you don't enjoy what you do, then you just shouldn't do it. And I think that's a super, but I love what I do at Think Private, and I think that sort of plays into, allowing me to work, the long hours that I do and put the effort in that we do.
And are you structured with your days? Like, Mondays you do certain tasks, or is everything you jumble it around? How do you organize?
Yeah, like somewhat structured. Like, every day pretty much looks the same. I'm up at 6, go for a walk, start work at 6:30, and then just work through until it's time to go to the gym, which is at about 6:30 in the evening.
I don't know how you do it. I'm an early morning gym man. At the end of the day, my brain is dead. I cannot do anything.
Yeah, no, I'm sort of similar, but I think my brain is just a lot sharper first thing in the morning, and I find I'm most productive. And so if I'm up going to the gym, I find it just sort of breaks that morning flow that I get. But if I'm up at 6, starting work at 6:30, by 9 o'clock in the morning, I've done 2.5 hours worth of work, and most people are just starting the day. And like, I'm not trying to make the claim that, I'm better than everyone because I'm starting work early, but just for me personally, getting that extra work in when I'm most dialed in, have a coffee, really get deep into the work. It allows me to just put a lot of that additional working on the business stuff aside, so that when 9 o'clock rolls around and the phone calls start coming through, I can really focus on working in the business and settling deals.
Look, yeah, it's something I've got to work on is getting in as early as I can, because as soon as you get in early, you don't have anyone bugging you. You don't have clients. You don't have staff. You don't have, I've got to call this person at this time. It's just, let me focus on what's in front of me and let me smash it out. And yeah, mate, the earlier you get in, the better. So if you're getting in at 6:30, oh, wow, I'm jealous. But tell me, what's the next steps to Think Private? Like, where do you go from here? How do you continue to grow? What's on the agenda?
Yeah, so short term, we're just going to continue focusing on building out the tech, working on the auto matching, and we're hiring at the moment. So we're looking for a relationship manager to expand the team and work with us on the private credit transactions. So that's sort of the short term focus, is just keep doing what we're doing. But in the background, the sort of vision is to keep working on this auto matching technology and build a platform that, I guess the vision for it is a broker can submit a scenario through the platform and in real time get automatically matched and issued with a term sheet, or at least an indicative finance quota mandate agreement from Think Private, which summarizes the terms that we can achieve for that transaction, and make that automated. So at the moment, that process isn't fully automated, but if we can, imagine this: you're a broker, you've just spoken to a property developer. He needs a $3 million loan for a property acquisition in the eastern suburbs, hypothetically. You come onto the platform, you submit the scenario through. We capture about 20 to 30 different data points depending on the transaction type. And in real time, we match you with a private lending offering, and you get issued with in real time, instantly, with a term sheet that outlines those fees and charges. And so you can take that to your client and sit down with them and say, hey, look, I've got, in half an hour, I've got an option for you, which is a market leading interest rate and fee structure. And here are the next steps to proceeding with the finance.
Mate, bring that on.
Yeah.
How far away are we from actually getting that?
Oh, look, I mean, I like to say maybe 3 to 6 months, but it's probably going to be a little bit longer than that. It's something that we're working on, and I think it'll continue to get better. And, we're working really hard to improve that sort of flow and that automation. So, yeah, I think it'll come maybe sometime next year.
Amazing. And tell me, what's it like onboarding a lender? Like, what are you having to go out and meet these people? Is it on previous relationships? What are you actually doing?
Yeah, it's a big mix. So I did have a lot of existing relationships, but there are a lot of lenders out there. And I think, as I mentioned before, there's over 100 different that sort of are on our list of lenders. But I do know for a fact that there's, upwards of 300-400 out there in the marketplace. And so, yeah, there's a lot of lenders out there, and there's obviously quality lenders that we want to do more business with, and lenders that, we probably don't want to be doing as much business with. And so my job is sort of to try and figure out where the best options are in the marketplace from quality, reputable lenders. And just meeting with them on a lot of my day consists of networking with and meeting with these lenders to understand their offering and build those products into the platform.
And also get potentially better terms, better rates, better love.
Yeah, correct. I mean, we do send volume through certain lenders, and so because of that, we do get preferential treatment and pricing, and I think that's just a natural thing in the industry. If you're facilitating volume through a certain lender, then you get special treatment, which is one of the benefits of coming through Think Private.
Wow. Yeah, no, definitely is. Look, in terms of like, growing your team, like you mentioned you're trying to hire someone at the moment. What is the process like? Tell me, like, is it a hard process? Are you going to a recruiter? How have you found it? Because I find it very, very difficult.
It is tricky. Yeah, it's probably been a little bit trickier than what I expected it to be. And the initial strategy that we took was, let's just write down a list of 20 people that we've met previously, worked with previously, that we think would be a good fit for the role. And the idea was we'd just reach out to them, catch up with them for a coffee and sit down and say, hey, look, we're hiring. This is the business. Would you be interested in joining? And I think probably the biggest lesson that I've learned from that is it almost comes back to that sort of Jordan Belfort, Wolf of Wall Street, like, sell me this pen. And the explanation that he gives is that the first question that you should ask is, how long have you been in the market for a pen? And I think that's sort of similar to a similar sort of what I've realized in trying to hire someone is it's very difficult to bring someone onto the team and offer them a job when they're not looking for a job. That's probably been the biggest realization for me. I sort of thought that, we've got this awesome business, we'll sit down, we'll sell them the dream and it'd be easy. But it's sort of been the opposite. It's almost like, we're reaching out typically to high performers that are probably in a really good situation at the moment and weren't actively looking for a new position. And so sitting down in front of them and saying, hey, this is what we can offer you. It's like, all right, well, great, but I'm sort of in a really good position where I'm at. I wasn't looking for a new role. And yeah, I think for us, so that's sort of made us have to, I guess, change our approach. We are still running that sort of approach where we're catching up with those individuals that we've individually identified. But yeah, at the same time, we're doing LinkedIn ads and job ads and so on to try and find a top tier candidate.
No, I like it. No, I'm keen to check back in with you in the future and see, okay, well, how have you developed that process? How have you found the right person? What are you doing at that point in time? So yeah, it'd be good to track.
Awesome, mate.
But tell me, private lending, it has plenty of benefits, but what are some of the negatives and what's something that people need to look out for with some of these lenders?
Yeah, look, you need to be really careful with how you compare the cost of different options. And so I think one thing that's a little bit different to bank lending is that private lenders will structure their pricing very differently. In the bank lending, it's quite standardized. You have an interest rate, and sometimes if you're in the non-bank space with a second tier lender, you might have like a risk fee or an establishment fee. Sometimes there's like a valuation and legal costs, but it's all very clear and transparent. Whereas in the private lending space, sometimes there's additional line fees and monthly ongoing fees that are sort of added into these terms and facilities from
Just
private
on
lenders.
The line fee, can you exactly explain what a line fee is?
So a line fee for when you're doing, it's typically something that's charged on a development finance transaction. And so the way that a construction financier will structure their pricing is they'll have an interest rate on drawn funds, which is, say hypothetically, that's an 8% interest rate, and that's payable on the drawn amount. So for a construction loan, you don't draw the full funds from day one. It's progressively drawn in line with when you need it to pay the builder. And so you've got that portion, but then in addition to that, they'll typically charge what's called a line fee, and that's charged on the facility limit. So the full loan amount from day one, typically a lot less than the interest rate that's applicable on drawn funds. It's just the way that they structure the pricing. And so when you're comparing a development finance option, you need to sort of understand how to apply weighting to a line fee as opposed to an interest rate and model the total interest cost for that particular scenario, because every option's different. And it's just about understanding what's the total cost in interest and fees that I'm going to be paying for this option. It's not always, is this a better interest rate? Is this a better establishment fee? It's just breaking it down and looking at the numbers.
And comparing apples to apples, because different lenders have different names for different fees. Is that right?
Yeah, correct. Yeah, especially in the private space. So the way that we simplify it is we've created a custom formula. We call it the all-in rate. It's almost like a comparison rate in the bank lending space. And so what we do is we take the interest rate, the establishment fee, any line fees that are charged, monthly ongoing fees, legal fees, valuation fees, exit fees, and we factor them into what we call the all-in rate. And that way we can accurately compare.
I love that. All-in rate.
Yeah. Something that I came up with, actually.
There you go. I love it.
And yeah, we use that to compare options, because otherwise it's too difficult. Like the amount of times a broker's called me up and said, hey, Josh, I've got a 7% interest rate. It's super competitive. Can you beat it? It's like, all right, great. Like you've got a 7% rate. That sounds awesome. Tell me about the other fees. Is there a line fee? Oh yeah, 2% line fee. Is there an exit fee? Oh yeah, 1% exit fee. What are the legal fees? Oh, it's X amount. So when you factor all of those in, and then you compare that to an option which may have had an 8% interest rate hypothetically, the 8% option may end up being a more cost-effective solution for the customer. So it's just about comparing, just really breaking it down to what are the fees involved, and just doing an analysis to compare which one's going to be best for the client.
Wow. Love it. All in rate. And look, when you see that all in rate, how does that, from owner's side of view, point of view from yourself, like how does it make you feel when you say, well, I'm going to make this broker look really, really good, explain the product to the broker? How does it make you feel seeing the reaction to the broker or the client when you break this down for them?
Yeah, it's obviously a good feeling when you're breaking down two options, and they might have something that they thought was a really good option, and a lot of times it is. But I think what we're able to do is by having access to more lenders in the marketplace and at scale using the technology, we can find those more cost-effective options and break down the comparison between those two options, present it to them, and explain to them how this is going to be better for the client. It's going to be more cost-effective, and I think it's probably one of the most rewarding parts of the job is finding solutions that are going to save the borrower money and that are competitive in the marketplace.
And I love it. And tell me, like, let's say someone's got a client, they can actually get finance via a traditional lender versus a private finance. Why would someone go with that private funding deal? I know obviously you don't know the transaction, you don't know what the bank's offering, but what are some of the things that it just smashes traditional lending out of the park?
Yeah, like some of the key factors. Look, just to sort of preface, if there is a bank lending solution there, a lot of times it will be the more competitive solution, just purely based on interest rate. And so I'm not sort of coming here saying that we should be ruling bank lending out entirely, because it definitely serves a primary role in the lending industry, and for good reason, because the interest rates are a lot more competitive. It's typically a longer term solution, which clients like. They can service it on an ongoing basis. But the benefits of taking on a private lending facility, typically speed is a big one. Being able to move quickly. So like we mentioned before, the opportunity cost of a transaction, you need to settle on a property, you need access to quick funds because you need to do X, Y, and Z in your business. I think that's a huge opportunity in this space. In addition to that, just purely being able to access capital when you weren't able to in the bank lending space. So the bank might say you're capped out from a servicing perspective, or we're not interested in this asset type, or it's for whatever reason they can't facilitate the deal. And so being able to maybe purchase that unique property or take on that additional purchase where you may or may not have been able to in the historically with a bank. I think there's a huge opportunity there, but it just comes down to breaking it down to each individual scenario. Property developers, they can start their projects sooner if they don't have pre-sales, and so that might allow them to get onto things quicker, save on the interest costs for holding the land and different things. So it comes down to every individual scenario.
And what sort of information does a client actually need to give to get an approval with a private funder?
Look, it varies. It's typically a little bit less than what you would need to provide with a bank. But that's sort of just speaking generally. Some private lending options do require a little bit more information. Some are a little bit more flexible. Depends on the type of transaction that you're working on. But I think probably the main thing to bear in mind is that they're not often looking at servicing as deeply as the banks are. And so, we're not expecting financials. We're not expecting tax returns. It's a little bit more flexible. Typically, income can be verified by way of an accountant's declaration, as opposed to a full assessment of the cash flow position of the group.
But most of the time, you're not looking at income, so that would be just rare that you would get an accountant letter. Is that right?
Correct. Yeah. There are situations where it might be a longer term facility, maybe 2 or 3 years, and it's sort of like a bridge between, you're sort of working towards getting them back into a bank. They've got the cash flow to service the debt, but they don't have from the bank's perspective, their financials don't stack up to actually be able to service from, based on their assessment criteria. So, things like that where, they're a strong client, high net worth, they've got a really good cash flow position, but just the way that the banks assess their income may not allow them to service.
Yeah, no, I'm with you there. The banks, they do like to make it hard for people out there sometimes, but what can you do? Look, can you tell me, if someone's hesitant about using private funding, what's one thing that you would sort of say to put their mind at ease?
I think the biggest thing is just explaining to them how it works, how to breaking down the fees and charges involved. And I think that's probably the biggest thing that scares people about this space is they just don't understand it. So working with the right advisor to understand, what your options are in the space, comparing that option to what you may be able to get from a bank lender, and just explaining how the process works and what's involved. I think that's the biggest thing. I think once someone understands what they're getting themselves into and exactly what it is, then it oftentimes makes them a lot more comfortable with what it is. And I think, that's probably the biggest thing.
All right, love it. No, makes a lot of sense. And can you just tell me, how does the back end of this work? How does someone make money out of this? Explain it to me. I'm an investor. I'm sitting on $10 million. What can I do with my $10 million, and why would I potentially lend it to a private lender?
Yeah, so there's been a lot of articles out there calling it the golden age of private credit. And I think it's definitely a growing industry. As I mentioned before, it's gone from 10 to circa 20% market share in the last few years. A lot of that's been driven by investor demand. And so investors have sort of identified it as quite a lucrative investment strategy or investment opportunity. And so, the way it typically works is they would invest it into one of these private credit funds, and those funds would manage the money on behalf of the investor, and they'd pay them a return based on the type of transaction that they're getting involved with. So there's different structures. It could be a pooled fund structure where the lender will pool a group, pool the money together and lend that to multiple loans, or it could be on a deal by deal basis. And so the lender might say, look, we're going to do a deal for $10 million and we're raising, we're looking to raise $1 million each from 10 different investors, hypothetically. And the investor would get a return based on the risk profile of that transaction.
And what sort of return are they getting? The whole of the interest rate or is the private fund loading on top of the interest rate that they're giving back to their investor? What are they doing?
Look, I think it varies depending on the fund manager and the type of transaction that you're doing. Typically the private lender or the private, the fund manager will add a margin to the rate that's paid to the investor. So hypothetically, they charge a borrower 9% per annum. The investor might get 8.5% or 8%, and the fund manager would take a spread. In addition to that, the fund manager will charge their establishment fee and some of the other fees that we referenced, like maybe ongoing monthly fee, line fees, and different things. So, I think typically for an investor, though, it is quite an attractive investment opportunity. And sort of the analogy that I give and the one that was sort of taught to me is that if you're sitting there and you're looking at a house in the eastern suburbs, say it's worth $5 million, and you've got a property developer that's looking to release equity from that property to put towards their next development project, and we lend them a 65% LVR against that asset, the investor might get a 7 or 8% return on for investing in that transaction. But when you look at the risk involved for that investor to lose money, the borrower would first need to default, and then the property would need to be sold for essentially 30% less or more than 30% less than what it was valued at. Say it was worth $5 million and that would lend them, say, $3 million against that $5 million. They would then need to sell the property for less than $3 million for that investor to lose any money, which, you're looking at the Sydney property market, when has it ever dropped more than 30% inside of like a 12 to 24 month time frame? It's quite uncommon. And I think when you compare that to, you look at the stock market and all these different shares that are dropping, 20% in one day, not in every circumstance, but it has happened before. I think when you compare the volatility, a private credit investment is a lot less volatile than what you would expect from, investing in the stock market.
So essentially, really, the only real risk would be that if a borrower did default on the debt, you sold the property, potentially your money might be tied up longer than it should be. But I'm assuming you're still getting interest on while it's all tied up. And is it like default interest? Explain that to me.
Yeah, like typically the lender will charge default interest. If the borrower is not making repayments, then just like the banks will, default interest would apply. But yeah, typically, if you do have to sell the property, and it's not a common situation, but it does happen, just like it happens in the bank lending space. Then yeah, you would recover your principal investment, and then potentially, hopefully all of your interest payments as well.
Yeah, amazing. No, look, the private space is like a fun space to be in. There's lots of opportunity. I mean, where do you see obviously it's a growing industry, but is there anything else like with tech or like where does this industry go? What's next?
Look, I think there's still a lot of growth to happen in this industry. Like I mentioned before, when you compare the commercial real estate markets, commercial real estate debt markets from Australia to the US. In the US, 50% of all commercial real estate debt transactions are facilitated by private credit providers. And so in Australia, we're sitting at about 20%. And my thoughts are, and the predictions of others in the industry, is that percentage is going to grow from 20% to closer to maybe 30, 40, or even 50% over the next, say, 5 to 10 years. And that represents significant growth in the industry. And I think what we'll find is that it becomes a lot more institutionalized. There's a lot more, I guess, supply that comes into the marketplace. And because of that, the options become a lot more competitive. So, as more money flows in and the options become a lot more diverse, there's a lot more supply, it pushes the cost of the lending down, making it an even more attractive opportunity for borrowers to get access to capital.
So essentially your platform could actually change the private space in Australia, making it easier for people to get into private lending. That's
the plan. Yeah, that's the plan. We're trying to make it easy. We're trying to make it very clear and transparent, and give access to these borrowers, give them access to the most competitive solutions in the marketplace.
Amazing. You're a true entrepreneur. You've seen an issue and you're combating it. You're going, well, let's make it easier. Let's do it. Look, from an entrepreneur perspective, I mean, what's the biggest thing you've learned in both your businesses, and what's some advice that you could give to someone that wants to start their own business?
That's a really good question. What's the biggest lesson that I've learned? I mean, a big one for me is just focusing on relationships. I think focusing on relationships is super critical to building a business, whether that's relationships with your staff, with your business partners, with your any of your stakeholders. So it may be, in our instance, it's the lenders that we deal with, it's the brokers that we deal with, it's the solicitors, it's the accountants, it's the property developers. And so everything about the business ties back to a relationship. And so focusing on the relationship, building quality relationships, and I think if you can focus on that, it's pretty powerful and will help the business significantly.
And how does your age play a factor in building relationships? Because obviously we're both young, but this is an industry dominated on males aged between probably 50 and 60, really, or 40 to 60. How do you sit in front of someone and go, bang, 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 I really am the man? What do you do?
Yeah, look, it's definitely something that I was concerned about early on in my career. And, you sit there and you've got a meeting with a 55-year-old managing director and you're a little bit nervous about it. But I think as I've sort of progressed through and been in the industry for probably 6 or 7 years now, I've sort of come to realize that age doesn't really come into consideration. There are some people that do hold some sort of, they make some assumptions about you because you are younger. But yeah, look, I think for me, it hasn't really been an issue. And I think the biggest thing to consider and that should be focused on is just the competency. Like, if I was young and not able to execute on a transaction, well then, maybe I am too young and inexperienced. But, if you've got the ability to execute on a transaction and make things work, and you're competent and you know what you're talking about, then, I don't see it being a blocker at all.
100%. Know your product. If you know your product, you can beat anyone else in the room, and just know and be confident with it. For you, have you always had the ability just to be confident and know, or have you built this? Have you had to work towards this?
Yeah, I think, like everything, there's until you have that complete level of competency, you are a little bit nervous because you sort of, you find yourself sort of trying to figure things out on the go. But yeah, look, I mean, there's always times that you sit there and you go, oh, I'm a little bit nervous about this meeting, or I'm a little bit nervous about taking this risk, hiring an employee, starting the business, and et cetera. But what I've found is just by taking that risk, taking the first step, all of those nerves seem to dissipate, and you often look back and go, wow, well, it panned out all right, and it's probably a better decision to take the risk and as opposed to sitting back on the sidelines and not taking action.
Mate, I love it. I was just thinking about it then. I can just see us having a conversation in a couple of years and we actually sold Think Private for a ridiculous amount of money. It just hit me just then. So we're going to keep this in just so we can look back on this, because I just am seeing a vision. Like, I can just see that, mate, you're dialed in, you've built an amazing tech platform, you understand your product inside and out, probably better than most people that have been doing it for 20 or 30 years. You just get it. Tell me, is there any skills that you're trying to work on yourself to build to get you to that next level?
Yeah, always. I mean, I'm always trying to improve how we operate. A big one for me is just building relationships, and I touched on that before, but it's not something that, or at least for me, it wasn't a natural thing, and it was sort of something that I needed to get repetitions in for, and you need to work on it. You need to focus really deeply on how you go about meeting with people, how you interact with people, what steps are required to build a quality relationship with someone, because it's not just as easy as being a good person. If you meet someone in a business environment, shake their hand and get their business card and you never speak to them again, well, that's a lost opportunity. So just capitalizing on those opportunities. But yeah, look, I'm always learning, and always, listening to podcasts, reading new books, and trying to, learn ways to better myself, whether it be being a leader. It's a big one that I'm focusing on at the moment. The relationships, working on the technology. I mean, that's a big one. And as we mentioned before, technology's ever changing, AI and all these different things are coming in. And so making sure I'm at the forefront of that is something that I'm focusing on. But yeah, it's a journey, and I think everyone's always learning at any point in time.
And just on that, like, what is like a challenge that you've had to overcome since starting this business?
Oh, plenty. Like, it's not easy, to say the least. Yeah, look, I mean, obviously starting a new business, you've got cash flow, considerations, and you got to make sure you're making enough money to cover your expenses. Just building the technology was an interesting one.
Did you make any mistakes in that sort of initial piece trying to build the tech?
Well, yeah, like, I mean, the way it sort of started is this business idea was an idea between my brother and I, who's also my business partner, and we just had this idea, and we sort of looked into how we could potentially execute on it. And the first step that we took was trying to teach ourselves how to develop software. And so I think for probably a span of 12 months, we did this software development course on the weekends and tried to teach ourselves how to code. And, we've got quite a basic understanding of software development. And I think it's benefited me getting us to this point. But we quickly realized that we weren't going to be the ones that were going to be able to develop the software and build this platform out. And so the next idea that we had was to bring an equity partner in, and that's what we've done. And we've brought a software developer into the business. He's now working on building the tech full time. And so, you try one thing and that doesn't work, and then you move on to the next and you try another. And for us, this is, it's working great so far.
But I think that's a massive takeaway. It's like, well, you don't have to wear every single hat. I know you're wearing a lot of hats, but mate, you tried doing it yourself, which is it's a credit to you to go, wow, I've actually had a crack at doing this. But like, your expertise is not building something. Your expertise is putting it together and getting the right people for the right job, I guess.
Yeah, 100%. You can't wear every hat. Who, not how. I think there's that book that goes into it in a lot more detail. But yeah, when you've got a problem that you need to solve, I guess the premise of it is don't focus on how am I going to do it. It's who am I going to get to help me do it. So whether it's hiring an employee or outsourcing it to someone else, or leveraging on a relationship that you have, maybe you need an introduction from someone to get you to meeting that person or going down that path in a more efficient route. So yeah, I think that's a super critical aspect to growing a business, is just acknowledging that you can't wear every hat. And it's you're a business, so it's focusing on building a quality team with people that can, cover all bases.
Love it. Love it. 10 out of 10. And tell me, what's the most rewarding part of actually seeing this come to light? Because this would have been something I'm assuming you were thinking about a long time before you started this business.
Yeah. I mean, we've had the idea for a while, and, nothing like this something like this doesn't get built overnight. I guess the most rewarding part, or one of the most rewarding parts, is, like I mentioned before, like I'm the one, I guess, designing the website and putting the designs together for how it should look. And so when I put those designs together and put them to the software developer to execute and implement them, seeing that come to life is super rewarding. Like you've built something from scratch, and it's now live to the world, for the world to see. And that's a really exciting aspect of running the business.
Amazing. Now, before we wrap it up, can you just explain to me what a typical client can look like for you, and then finish on how they can get in touch, and how does a broker work with you?
Yeah, so our typical client is a mortgage broker. Like I mentioned, 90% of our transaction volume comes through mortgage brokers. So if you're a mortgage broker and you see one private lending deal a year, or you see 100, there's a potential to work together. And so I think the best thing to do is just reach out to me, find me on LinkedIn, and reach out to me and see how we can work together. Because what we're building is really exciting, and I think even if we can just show you what we're doing, I think that would be, I think it's something that would be worthwhile doing.
Amazing. And then from a borrower perspective, what do they need to look like? What's the scenario they would come to you for?
The lending that we do is all for commercial purpose. So we're not dealing with mums and dads that are looking for a home loan. That's not for us. But who we deal with typically are property developers and business owners. So property developer doing a development project, business owner that's looking to access capital secured against their property assets. That's the type of business that we do.
Amazing. Well, Josh, mate, you've absolutely smashed out of the park. You clearly know your stuff inside and out. Mate, I'm really excited to see where Think Private goes. I genuinely have a vision that I see this selling for massive money one day. But yeah, mate, I'm really excited to continue to watch your growth trajectory grow. And mate, let's continue to do some deals together. You're extremely hardworking, and you call a spade and you get things done, which is unique. There's not too many people out there that just will say, no, I can't do it, or yes, let's do this.
No, I appreciate it. Thanks, Blake. Thanks for having me on the podcast.
All right, everyone. Well, thanks for listening, and listen in on the next one on Pack Chat.
Thanks, Blake. Cheers.